Road to the IPO, le podcast des entrepreneurs aguerris. Today's podcast is in English, and I have the great honor to have on the show Jay Ferst from FinTech Investor. Hi Jay, how's it going?
I'm doing well, thank you. How are you?
Thank you for accepting our invitation on the show.
Oh, you're more than welcome. Thank you for the opportunity. We appreciate it.
Yes. So for those that are listening to this podcast, can you introduce yourself?
Sure. My name is Jay Ferst. I'm a managing partner at an investment firm called Ferst Capital Partners.
Okay.
My other partner is my brother Dominic.
Yeah.
And we're very active early stage investors in Canada.
Okay.
As it relates to financial services.
Cool. So before we go into fintech, financial technology, and investments, I want to talk about your career as an entrepreneur. So why did you decide to become an entrepreneur? Because you've been in the entrepreneurship environment for a long time. So where does it come from?
It's a good question.
Yeah.
You know, I think it first and foremost just came from the DNA.
Okay.
You know, my father was an entrepreneur. He was in the construction business, but he was independent. And, you know, when you grow up young, I was working on construction sites and helping him with projects since I was 14 years old. It was just natural in our family that you built your own thing.
Okay.
When we came out, myself and my brother, because we've always worked together, it was the early 90s, as we call entrepreneurs.
Okay.
There wasn't the same environment as it is 20 years later.
It wasn't sexy like now.
No, it wasn't sexy. It was actually considered a little weird for a lot of folks, because it's hard to wrap their minds around young people building their own things.
Okay.
There's been an incredible history of entrepreneurs, but it's probably been in the last 10, 15 years where this idea of entrepreneurship has really caught fire.
Okay.
And we love that, because there's a real effective support system that's grown around the idea. But back in those days, it was different.
Okay.
But it also gave us an opportunity, because not many folks were doing what we were doing.
Yes.
In terms of maturing as an entrepreneur, I think it was just a family thing. It was just what we knew. But as I grew and became more mature, I think I also understood that just my personality spoke to it, and it's really just about independence. I could never effectively wrap my mind around having let's say a boss determine how my children eat. And that's in our minds, as we invest in other entrepreneurs, it's that motivation and how they think about the world and what's going to sustain them through difficult times. And for me, I was fortunate. I had a young family, and like all entrepreneurs, we went through our challenges. I was able to leverage that type of motivation, which was really squarely anchored into that just my mental model of how the world works.
Okay, so it's DNA and environment, because your parents were entrepreneurs, so it gave you the opportunity to really see another view of the world.
Right, which the view included both the good and the bad. You know, we knew and understood feast and famine as a family.
Yes.
I mean, when my father was up, the fridge was full. When he was down, we all kind of rallied around together as a family and discussed the situation. We supported each other that way. In the last 20 years as building businesses and investing in entrepreneurs, it's been a touchstone for me and us as investors, and we can relate to the entrepreneurial experience. We try to strip away those who are interested in the sexy and in some respects also maybe even depend too much on the community. We really gravitate to those entrepreneurs who kind of fundamentally understand the journey and what it may look like, and then support them in time of need.
Cool. Well, let's talk about the technology, because at that time you were an entrepreneur, but a tech entrepreneur. So why technology? Why did you decide to start businesses in technology, in the internet? Because I saw that you have like two businesses that they became successful and then you sell it. But why tech?
Well, I think it kind of it begins with how the entrepreneur sees the world. I mean, quite simply, an entrepreneur sees or feels that there's a need that's been unfulfilled, either an existing kind of market dynamic that maybe is not as effective, and so they'll leverage maybe some incremental changes, so improve upon something that's been out there. And there's another cohort of investors who are lucky enough to be in the market, in a market that is kind of at an inception. Okay. And we have 500 years, 1,000 years of history, from the printing press and let's call it maybe steel and oil extraction to radio and the internet. So these are dynamics. These are fundamental shifts on the way people are able to do things. Okay. And again, leveraging innovation. And so some entrepreneurs are fortunate enough to be ready to participate, and they have what it takes to say, hey, I think this is something that could be interesting. What's interesting about that dynamic, though, is that it needs to be a certain type of entrepreneur who can really accept risk and messy environments. Yes. Back in the mid 90s, when myself and my brother got involved in what's called the internet. Back in those days, we had people actually tell us that this is just a fad. I mean, there was no way people are going to exchange messages online, and this stuff is going to collapse. And of course, the internet went through kind of that cycle where it really got hyped up by 99 and then it crashed. Yeah. But if you just take a look at the adoption of innovation over the last, few hundred years, especially post-industrial age, there's some very specific patterns. And you'll see that a lot of the kind of famous entrepreneurs, or those who made a name for themselves, those guys were those folks who were those early cohorts who jumped on top of early innovation and rode through these vicious cycles in some case. Yeah. And so we were just lucky enough. I was about 23 years old, 24, and we had seen this kind of phenomena around communication through networks, and we got involved. And it was quite simply timing. And so I think tech picked us. We didn't pick tech. Okay. As an entrepreneur, we looked at what's going to change the world, and we got involved.
So you believe all these innovations like a circle?
Correct.
Because you were talking about radio, television, and the internet.
Cycles.
It's always the same cycles, just the platform that change.
That's correct. Okay. Yeah. And so our first business, we built, scaled, and sold one of the largest Eastern Canadian ISPs in this country. We were afforded a lot of mistakes. Okay. It's another thing we learned as being entrepreneurs, that when you have a market that is growing and it can be quite large, where it's folks want to get and participate. As young entrepreneurs, we were afforded a lot of leeway to make mistakes. We were 23, 24. Okay. And we came from the construction business. Okay. And that market allowed us to learn. What's interesting is our second business, where we leveraged, let's call it the internet, to kind of participate in the financial services of this country, which was specifically brokerage, online brokerage. It was a little bit more challenging because we were up against incumbents and an established way of doing business. Okay. And our job was to leverage this technology to allow people to do things a little better. And that in itself was a different type of journey. Our first journey was all about the market and us participating early. Our second venture was really about leveraging a technology in an existing market, and so it was a little less forgiving in terms of the mistakes. Yes. We just faced headwinds when the market crashed. We were in the business of trading online. It was severe. The good news, though, for us as entrepreneurs, we were afforded an opportunity to learn through adversity, and a great lesson. Okay. And sometimes I believe that it's, as entrepreneurs, it's those hard times that really highlight your weaknesses and your strengths, and you grow.
Cool. But then how do you sell those companies? Because people want to know how to successfully sell a company like yourself. Because you have the trade freedom securities that you sell to Scotiabank, if I'm right.
That's correct.
And also Odyssey Internet in 997. Mm-hmm. And both of those companies, you sold that to other companies. So if people that listen to this podcast, they want to know how do you sell companies exactly? Right.
It's a good question. It's a big question. Yes. I'll try to do it justice. In our experience, and just I've been kind of researching entrepreneurship and building companies since I was 14 years old.
Yes.
We clearly see that there's a couple of cohorts. There's one cohort which is very unique and rare. It's those folks who never envisioned selling anything, and they're in for the long haul.
Yeah.
And they love the transition, because from an early startup, as you mature, and then you have an organization, become a market leader, it just takes different skill sets, your ability to build a different type of team, and to work through those chapters.
Yes.
Some folks are really good at that. Other folks aren't. They're very effective at the certain stages of a business. And most people fall into that category. We did, as entrepreneurs, we understood what we were good at and what we were not good at. We understood also what was interesting to us, and it really was the inception.
Yes.
Finding that opportunity, building it out, and then handing it off to another, maybe more mature entity, where you go from startup to more management.
Yeah.
How do you do that effectively? Sometimes I use the example of writing a very good story or a screenplay. You need to know the ending.
You need to know the ending.
You need to know what it's going to look like. Now, we can't predict for certainty what an ending looks like, but you can at least aspire to get close to it. So you look at a market. So, for example, Trade Freedom, which was the last company that we sold as entrepreneurs, we understood that where the value was in that space, and so first and foremost you need to build that value, and you build it by doing the right thing, providing your end user real value in your product. Once you've done that, you take a look at how do you scale it and how do you take it, quote unquote, to the next level. And in terms of financial services, we understand what the next level is. In Canada, that is distribution. And it's to millions of Canadians. Right now, folks who really have a lock on that are the large incumbents. So we have a very specific structure in this country. So as you're taking a look at the market and where it can be improved, either through a 0 to 1 innovation or an actual incremental improvement, you take a look at the folks who are already in market who may potentially want to acquire that value. And once you've understood the kind of economics of that value, you work backwards and figure out how do you build the type of organization, value, people, the product itself, that could be an attractive acquisition target to those who may acquire you. So the first portion of the exercise is strategic. Market, who's existing in there, and what you can do to fill it. And then the second is tactics. So let's work backwards. Tactically, how do we effectively build this value proposition to an acquirer? And it just comes down to numbers. If you know the value of your user, the cost to acquire, what's their lifetime, value. It's just numbers and economics.
Does it have to fit with the company that's gonna acquire the startup? Does it have to be the same values, or some companies only want the technology, they don't want the team, or just they want the team? And
there's so many different ways, that we could, approach an acquisition or those who acquire. There's a multitude of reasons. If you understand the real value of what you've built, then you start aligning yourself with those folks. So is it that maybe one of the major, again, I'm just using it as in the context of incumbents in financial services in Canada, when we can open this thing up, but just to keep it specific, there may be an incumbent that's fallen a little behind in one of the segments, and they need to play catch up. Well, that would probably revolve around getting access to your IP. There may be another instance where they feel as though they don't have the internal capability to maybe express something a little bit more effectively that they have, so they may be looking at the team. It really depends. The idea, though, is you need to take a look at and to figure out what you could be really good at, and then start aligning yourself with those folks.
So do you believe that in the future there's going to be more and more companies that are going to be acquired by bigger companies? in the tech environment?
Sure. I mean, that's just been the history. There's going to be a few that are going to stay in market and establish themselves as market leaders. You traditionally see those folks as being those who really innovate at a fundamental level, a different way of doing things, and they're able to sustain themselves. As investors, that's one of our big challenges is to keep these type of companies in market. Because it's very, very difficult. As you pass through the gates of inception, early stage, you find your product market fit and that we need to scale. There's just so many challenges, and the complexity of how you have to evolve as an organization. And, it's tough. And so entrepreneurs, every time they hit those gates, have to look and say, this is another 3 or 5 years. Do I have what it takes? Especially, when you're faced with an attractive offer to take you out. And so as investors, we try to keep them in market, help them as a team, but also give them the necessary financing to keep moving through the food chain or up that ladder, because it truly is how you can express your vision. It's challenging.
That's why every entrepreneur, like you say, needs to know the end goal.
Right. How far do you think you could take it? Where do you not feel comfortable? And if you take the route of filling your team with those who are comfortable, are you willing to move back? There's so many considerations. But it really starts with self-awareness. Are you aware of who and what you are? Your team, your core team. Who are you as a business? Who are you as people? It helps you determine where you think you could go with these things. But in terms of acquisition, absolutely. I mean, it's just, especially in financial services, I mean, you have very large incumbents that have great balance sheets, and there's a history of them participating by acquisition. And so we find it exciting. That's why we do like being in the space. It's because you do have a tremendous market where you can get some solid base hits. And if you've built inherent value, we know that number. As investors, we know we're going to be safe. It really is, though, our job to support those who actually will knock it out of the park and stay in market for as long as possible.
All right. So before we go on the investor side, I just want to people that listen to this podcast, where they can contact you if they want to talk about any platform that you're on, Facebook, LinkedIn?
Yeah, they can hit us up at LinkedIn at Ferst Capital Partners.
Cool.
And we're pretty well embedded in the community here in Montreal and in Canada. We did a lot of work 2013, 2014, 2015 as a firm to try to support the building of a FinTech ecosystem in Canada. We felt we were a couple of years behind, and particularly Europe and Asia, and you need to participate. We felt that there was a few attributes that we had here in Canada in the tech kind of community where we could leverage our strengths, in particular around data, our ability to harvest as well as kind of understand and do something with it. I guess the term we use now is AI. It's an important component in our minds in terms of how you can leverage financial services. And so we saw a real correlation there. And it was just a question of bringing together the different pieces of the puzzle. The entrepreneurial community, the tech startup space, investors, government, and also the university themselves. So we spent a couple of years just getting out there and helping out, and we feel really comfortable. We feel as though since about 2017, moving into 2018, we're starting to get together, and feel like we've participated. We put in our time to help out.
Cool. We're gonna put all the links so people can contact you on the description of this podcast. And I want to know, why did you decide to become an investor? You have like a good career as an entrepreneur. You may have continued building other businesses, but why did you decide to really be the one investing in other entrepreneurs?
That's a good question. It ultimately came down to the fact that we felt very comfortable understanding the dynamics of financial services and technology. We saw the landscape evolve in different jurisdictions in the world, and that we were a little behind here in Canada. As entrepreneurs, we saw that as an opportunity, but we didn't feel as though we could build 15 companies ourselves.
Okay.
We felt as though we could probably more effectively leverage our experience as entrepreneurs to support kind of the next cohort. And to do that effectively, it was as an investor.
Yes.
That being said, it took us a few years, 2012, 2013, going to 2014. We had to learn how to become investors. It's a business model unto itself.
Okay.
And so thankfully, there wasn't too much opportunity in the FinTech space in those days, so it allowed us to learn just investing. And we did everything, private equity, some public stuff, just more generic, non-FinTech, early stage technology plays. And, it was our own capital, so we were comfortable with making those mistakes with our own capital.
Okay.
And it's just, thankfully, timing-wise, we felt as though we'd learned. We understood how these things worked. We made our mistakes. And then we had a target. Okay. We said in the next 3, 4, 5, 7 years, there's going to be traction in financial services as it relates to technology, and we're ready to go. And so you saw us as a firm starting to scale in, and we're up to about 80% of our portfolio is really focused on financial services, starting in 2015, 16, 17.
But what I hear a lot is you have the timing. Like when you were an entrepreneur, you knew the timing to sell, and even now you knew the timing to invest. That's very great. Like you have that. I don't know where does it come from? This sense of timing.
We're kind of nerdy. We do a lot of reading.
Okay.
I'm fascinated by history. I'm fascinated by how people have gotten things done.
Okay.
And again, I've been reading about this stuff for 35 years, since I was 15 years old. So it's, I always believed if you understand the way the world works and people, you have a good chance to, get close to what the future may look like.
Okay.
And as an entrepreneur, you're willing to risk that you're not going to get there 100%, but that you're at least moving in the right direction. And if you get the timing right, you have a pretty good chance at a good rate of return.
Oh, wow, cool. So let's talk a little bit about Ferst Capital Partners. Mm-hmm. What is you do here? Like what type of companies do you invest? What are the companies you're investing right now?
Right. We kind of sit in a unique position. We focus in on early stage FinTech, but really our bread and butter and our sweet spot is B2C, so consumer facing.
Okay.
There's been a number of funds that have kicked off in this country, and the majority of them focus in on B2B.
B2B, yeah.
B2C has different challenges. We're comfortable in that space for two reasons. One, we've lived it as entrepreneurs.
Yes.
And two, we're comfortable because if we feel like we understand the inherent value that can be built vis-a-vis the market, and are willing to risk the incredible challenges that a B2C faces as opposed to a B2B when it comes to financial services.
Okay.
Quite simply, things like distribution, cost to acquire, regulatory, and then everything that has to do with scaling. Okay. Quite simply, it's tough. It's very, very tough. So while we appreciate and in some instances do invest in B2B, we see that as more enabling or supporting an existing infrastructure. Okay. So let's call it making a bank more effective.
Yes.
So digitizing, or you maybe you'll leverage what they call AI to give them a better experience when they're trying to get a product through that bank. There's value there.
Okay.
Is it a 0 to 1? I mean, does it inherently change the way people do things? We don't think so. Okay. So you're going to get a solid base hit? Absolutely. You get a great return on your capital. Where we're more excited is where those potential home runs, where there's companies that they look at inherently changing the relationship. Yes. So maybe a simple example would be in wealth management. Okay. We've done the brokerage thing. We understand what it is to leverage the assets that you've taken under management, and that's been that business model for now we call them the robos for a long time. But in some respects, that business model is really a race, to the bottom in terms of how much you can charge.
Yes.
And so really the new discussion around that business model is around how do you leverage the value of those customers in a different way, because eventually it's going to come down to zero. And it should. In our minds, it's not really aligned with the success of your user.
Yes.
Because quite simply, that old model was predicated on just get as much of the capital, of their assets as possible, and that's how you get paid. Does that correlate with their success? If you take a look at the last 50, 60 years of asset management in this country, in North America, you actually take a look at the numbers and the answer may not be there. So what we like to do is take a look at those business models of those companies that we invest in, or those who take a look and say, can we reimagine the actual business model? So we have an interesting company called Milo in our portfolio, which their business model is actually not predicated on making money on the assets that they manage on behalf of their users. That is a very different fundamental shift. Very difficult.
On the financial field, it's very different.
Very different, because a Milo will take a look at their user, because they don't see them even as customers, and say, what does it take for them to be successful? So you have someone who's 24, they're looking to invest some of their savings and they want to build their financial future.
Yes.
They may be a little confused as to what are the best options for them when it relates to mortgages or insurance. Do I borrow? Do I use a credit card? What type of points do I use? And these are difficult questions for folks. And so what Milo attempts to do is build a relationship with that user. And it really is leveraging the data around what they do. Anchored in, of course, what are your goals?
Yes.
I mean, is it acquiring a house? Is it saving up for an iPhone? Are you starting a young family and you're thinking about insurance? The idea is that if you can understand what your user needs to get done, and Milo is able to support them in achieving that goal, it really is more of a win-win situation with complete transparency. And so Milo's job is not to build a solution, but to look maybe outside in the world to say, where can we support this user? Is it a third party? So do we partner up with maybe a great brokerage firm in mortgages, or maybe something that we can do internally? It's inherently a different type of business model. It's a different relationship that a financial services company will have with the user.
So it's very personalized, very personalized. I mean.
Well, and that's the trend that we're seeing on big tech.
Yes.
I mean, you see the success of companies like Google, and again, if the user opts in. And again, for maybe our generation, when I say my generation, we're a little older, it may be a bit scary for us. But when you talk to the younger generation, I know my kids, they, and how they relate to data and privacy, as long as they feel as though you're not going to do anything which hurts them in terms of selling your data or pushing product that's inherently not personalized, it's a contract that you enter in. With folks. And so big tech does it, and they're doing it effectively. The Amazons of the world are starting to understand what can we do to help you, get to where you need to get to. And so that's a big missing link that we have in financial services. But I can promise you that a 15, 16, 17-year-old today finds it odd that when they start getting involved with banking and they start thinking about things like, how do I save and how do I invest this money, and then how do I start actually interacting with financial products? Why is it so weird? There's such a disconnect. I've got to go on a website. I see my parents getting stuff in the mail. Shouldn't they know that I'm transitioning just by what I do with my phone? I know, again, it's a generational thing, but this is the next cohort that's going to be experiencing and leveraging the opportunities when it comes to financial services. They expect the same type of relationship, and that in our mind is kind of the future of financial services.
Wow.
Yeah.
So that was a very good answer, because I'm fascinated by financial technology.
Well, just to jump in, our fascination is there too because we believe that it's just a big pillar in people's lives.
Yes.
How people spend, what they do with their money. I mean, it's some of the top things that people think about.
Yeah.
Your health, your family, your money. Those are really big fundamentals, and back to what we focus in on and why we just think that the closer we can get to a better, fairer, more transparent user experience as it relates to their money, I feel more comfortable explaining to my kids why I'm supporting that type of company.
Okay.
Because ultimately we think it's as close as you can get to helping the user, as opposed to maybe concentrating on how do I incrementally improve a legacy or an incumbent system.
Yes.
If you can fundamentally change the dynamic, the relationship, put the power back in the user's hands, we just think it's good for everybody.
Wow, amazing. So let's talk about Montreal. Do you believe that Montreal can become really a tech hub in North America? Because you see the Silicon Valley, San Francisco, but you believe that Montreal has this place as a fintech space, as a technological space in North America?
Sure. Well, I think the proof is already in the pudding.
Okay.
I travel quite extensively, and I mean, folks really understand the value that Canada is building, and particularly Toronto and Vancouver and Montreal. I think we've done a phenomenal job, and it's again, the job is connecting the pieces together.
Yes.
You need a vibrant technology community. It needs to partner up with investors.
Okay.
It needs to sink into maybe any regulatory kind of frame that needs to get involved in your business.
Yes.
And lastly, it's the financial institutions themselves. I remember back in the days, again, mid-90s, I was still very young, and Concordia University, I spent my education there. They pulled me in immediately, and they didn't quite know where to put me and to which to stand in front of which class, but they said, wow, this is a 23, 24-year-old that's kind of built something. So they put me in front of the marketing classes because there was no entrepreneur classes. But that was 20 years ago, and I take a look now at the evolution of the programs that you have in all the universities in this country. I love to see it where it's the support starts there. So you have someone, a young adult, who's trying to figure out, what do I want to do with my life? It's great that they have the opportunity to maybe take a couple of classes in university. Okay. And when you see that, it gives you great hope that the ecosystem itself is going to develop effectively. I think it's a question of identifying, again, what value can we bring, and where are we inherently maybe ahead of everybody else? And in Canada, I think that a lot of us are supporting this idea of AI. Okay. It's not new. If you've been, through the kind of the cadence of how AI has developed over the last, 3, 4, 5 decades, it's just now we're able to, through technology, effectively leverage the data. Okay. And so I think Canada's done a phenomenal job. We've positioned ourselves. We've got some great companies that are being built. I know that the larger or well-financed institutions in this country are looking to back these type of plays. So it's super exciting, and we just got to keep doing what we're doing. As it relates to FinTech, I think that the challenges we face is one of geography. I think there's more of a concentration when it comes to financial services around Toronto as opposed to Montreal and Vancouver. Okay. We understand why. All the big financial service companies and folks who are in that industry are coming out of Toronto. Yes. That being said, we're seeing jurisdictions again like Montreal who are understanding that the correlation between AI and data and financial services. They're going to do great things. Okay. So I believe in Montreal and in Canada. I think we have support from all the different players that need to participate, and we just got to keep working hard.
So we're almost at the end of the podcast, and I want to ask you a question. Where do you see yourself in tech community in the coming years? Where do you see yourself? Are you going to become more involved, or are you going to be just as an investor? Are you planning on investing in other technologies or really staying in the FinTech AI space?
Right. Well, it's we evolve and there's different chapters in our lives, and right now there's a heavy focus on effectively supporting our portfolio of companies. We've spent a lot of, the last probably 2 years investing quite heavily. And so about half of our mind share right now is supporting those portfolio companies. The other half of our mind share is looking yet again to the future. We count ourselves lucky. We feel as though we're catching a second cycle. Call it what you may, Web 3.0, the Internet of Value, blockchain, whatever you want to call it. There clearly is an evolution of technology as it relates to these networks, and we're super excited about it. We understand that it's early, it's messy, it's very scary. And so about half our mind share right now is what we call just getting back into the cave. And learning, understanding just the basic, fundamentals of this new, paradigm we think is going to evolve. And as an entrepreneur, I count myself lucky. I feel as though there may be an opportunity to catch not maybe one cycle, which was the internet, but maybe a second. And so I see that playing out in the next 15 years. I'm thankful that I'm able to leverage a great team that we've built and a little bit of experience. And it's a question of just riding that wave.
Cool. I feel like you have really an understanding of history. And for those that listen to this podcast, we should be learning more about history, because life is just a circle that goes and goes. And it's the same pattern, like you say. Agreed.
And I encourage all the entrepreneurs either that we invest in or even folks that we talk to is just first understand the world that you're operating in. And sometimes it may not be the sexy, and it seem a bit boring, but because as young people we always discount the past until we mature, and it makes sense. That's how innovation is born, is that we see things in a new light, and out with the old, in with the new, and we need that vibrancy. You need that spark. You need the ability to actually suspend reality at times as an entrepreneur. But what happens is, as we mature and we progress, if we actually take a look at the past, we'll see there's a real correlation, similarities, and it is a cycle. And it's a cycle of life. I mean, business is people. It's a human endeavor, and it's a society, and how we've worked as a society for very long. One of the things that we do find very interesting about looking at the evolution of, let's call it the Web 3.0, or it's this idea of decentralization of a network. I mean, we've always been successful as humans by actually centralizing, coming together as a group, and effectively communicating across great distances. It is an incredible human experiment to consider what the world would look like if we actually went and decentralized ourselves in terms of authority. The great strides that we've made in maybe the last, let's call it 500 years, is really been predicated on our ability as humans to actually centralize. Centralize how we look at and deal with money, centralize how we look and deal with kind of government and how we manage ourselves as communities, and thirdly, of course, religion. What would that look like when we decentralize that? Super fascinating stuff.
Super fascinating.
Let's see how it plays out.
Very glad to have you on the show. It was very fascinating. I'm glad, Jay. Thank you for being here on the show, and thank you for you guys to listen to this podcast. A pleasure.
Same here. Thank you very much for having me. Good luck with it.
Good luck.